Welcome to the Pro Ticker Deep Dive.
Today, we're digging into something that has just, well, taken over the markets in 2025.
Taken over is an understatement. We're talking about the explosive triple-digit growth in cybersecurity. Names like CrowdStrike, Palo Alto Networks, Cloudflare.
Exactly. I mean, you look at the charts. CrowdStrike, PanaW, Net, they're all up over 100% just this year.
They're absolutely blowing the broader market averages out of the water. This isn't just a good run. It feels like a massive, almost panicked repositioning of capital into securing our digital lives.
And that's really the mission for us today. We need to understand the why behind it. What specific forces are fueling this sudden cybersecurity rush? And is it sustainable?
Right. Is this a bubble or the new reality? We've kind of boiled it down to what we're calling a triple storm of drivers. First, there's the unrelenting wave of cyber attacks.
They're not just any attacks. They're being supercharged by AI, which changes the game completely.
Okay, so that's one. What's the second driver?
The second is a massive realignment in how big companies spend their money. IT security isn't just a cost center anymore. It's a growth catalyst. It's about survival.
From the server room to the boardroom, basically.
Exactly. And the third driver is just robust execution. These specific companies, the leaders, are just running their businesses incredibly well and consolidating the market.
Okay, so let's unpack that, starting with the macro picture. You mentioned the scale of the threat, and the numbers here are, well, they're kind of mind-boggling.
They are. The projected cost of global cybercrime is set to hit a record $10.5 trillion in 2025.
Wait, 10.5 trillion? That's an insane number. How do you even put that into context?
Okay, think of it this way. If cybercrime were a country, its GDP would be the third largest in the world.
Behind only the U.S. and China.
Behind only the U.S. and China. That's the scale of the threat these companies are fighting every single day. It's existential.
And a big piece of that escalating risk is AI. We hear a lot about how AI helps the good guys, but what does it look like on the other side for the attackers?
That's the fascinating part. It's a total double-edged sword. On the offensive side, attackers are using generative AI to create these incredibly sophisticated, automated attacks at a scale we've never seen before.
So you're not talking about one hacker sending a poorly written phishing email anymore.
Not at all. Imagine an AI generating millions of unique, grammatically perfect, and hyper-personalized phishing lures that use the internal jargon of a specific company.
Wow.
Humans just can't keep up. The speed is overwhelming. And that forces the defenders, our platform leaders, to race to deploy their own AI-driven systems just to have a fighting chance. It's a full-blown arms race.
So beyond that immediate threat, there's another driver that feels more permanent, right? The regulatory side of things.
Yes, and this is so critical for investors because it's non-cyclical. The spending isn't optional.
What do you mean?
Well, global regulators are cracking down hard. There are new rules on data privacy, on cyber resilience, and if you fail, the fines are massive. They can cripple a company.
So it's not just about avoiding the hack, it's about avoiding the regulator. And sometimes that fine is the bigger, more immediate threat.
Precisely. And that has pushed security spending through the roof. It's already been growing at about 12% a year, but it's set to hit nearly $240 billion globally in 2025.
And that budget is now being discussed by the CEO and the CFO, not just the IT manager.
It's a boardroom conversation about fiduciary duty to shareholders. That's the fundamental shift.
Okay, so that's the demand side. Let's pivot to how these specific companies are actually capitalizing on it. You mentioned platform consolidation.
Yeah, that's the theme. Enterprises are just drowning in security tools. Some have 50, 60 different vendors. It's unmanageable.
50 vendors. That sounds like a nightmare.
It is. So they're desperate to simplify. They want to swap out all those point solutions for one or two integrated platforms.
Can you just quickly define that for us? A point solution versus a platform?
Sure. A point solution does one thing, like manage a firewall. A platform, like what CrowdStrike offers, does 10 things. Endpoint, cloud, identity all in one system where everything talks to everything else.
And CFOs must love that.
They love it. It's less complex, lower chance of something breaking, and it's cheaper in the long run. And that leads to bigger deals and stickier customers for these platform companies.
Okay, let's get into the specifics then. Start with CrowdStrike, CRWD. They're kind of the poster child for this platform strategy.
They really are. Their latest numbers are pretty staggering. Revenue is up 21% year over year, hitting $1.17 billion.
And what about that key metric, annual recurring revenue?
ARR is now over $4.66 billion. That's the predictable subscription-based revenue that investors get so excited about. It's like a growing annuity.
And they're profitable too, right? This isn't just growth for growth's sake.
Exactly. Operating income grew to $255 million, which is a really healthy 22% margin. They're showing scale and efficiency.
All right, let's move to Palo Alto Networks, PAN-W. A more established player, but they're making some really big bets.
Huge bets on integrated security.
Yeah.
They finished the year with revenue around $9.2 billion, up almost 15%. But the real story is their next-gen business.
Their next-generation security ARR.
That's the one. That part of the business is on fire. It grew 32%, hitting over $5.5 billion. It shows they're winning the future architectural deals, not just the old legacy stuff.
And their customers are sticking around and spending more.
Yeah, their net retention is around 120%. That means the average existing customer is spending 20% more this year than they did last year. That is incredibly sticky.
Okay, and the third one, Cloudflare, ticker NET. What's their angle?
Cloudflare is really riding the wave of companies re-architecting everything for the cloud and AI. Their revenue jumped 31% to $562 million.
And they got good margins too.
Great margins. Gross margins at 74% and net retention is also very strong at 119%. They are perfectly positioned as businesses realize their old, clunky infrastructure just can't handle modern AI workloads.
So what it sounds like is that while the space is competitive, it's really splitting into two camps.
It is. You have the big integrated AI-driven platforms, and they are just pulling away from everyone else. They're using R&D and acquisitions to widen their moats, and the small guys, the point solution specialists, are left to fight over the scraps.
Which, of course, has led to some, let's call it market exuberance. Let's talk about the valuations, because this is where the skeptical part of my brain kicks in.
And it should. Institutional money is crowding into these names. CrowdStrike and Cloudflare in particular are trading at some very, very steep multiples.
So isn't that just a massive gamble? You're paying a huge premium today for growth that might or might not materialize tomorrow.
That is the number one risk. If that growth slows down even a little bit, if there's one bad earnings report, these stocks are vulnerable to a big pullback.
So what's the argument for paying that price?
The argument is that the total market is just so enormous and the consolidation trend is so powerful that they will grow into these valuations over the next 3 to 5 years.
I see. And Palo Alto is a bit different.
A little. PAN-W has the strongest current earnings of the three, so it's a bit more grounded. But even its stock is soaring because investors love that shift to recurring platform revenue.
Okay, so let's tie this all together. What are the core bullish catalysts that suggest this momentum can continue?
Well, first, that AI arms race isn't going away. That means spending on next-gen defense is basically mandatory. Second, that enterprise push to consolidate vendors directly benefits these big platform players.
And the regulatory pressure isn't going anywhere either.
If anything, it's getting stronger. And finally, the market itself just keeps getting bigger. Cloud, IoT, edge computing, every new device is a new thing to protect.
All right, let's play devil's advocate. What are the big bearish red flags here? Because a 100% run-up always has risks.
The biggest, as we said, is valuation risk. These multiples leave no room for error.
Right. What else?
Margin pressure. Constant innovation is expensive. All this AI R&D costs a ton of money, and if revenue growth slows, that could squeeze margins.
And then there's the operational risk, which feels huge. These aren't just software companies anymore, are they?
No, they're critical infrastructure. They are the nervous system of modern business. We all saw the market's reaction to that brief CrowdStrike outage in July 2024.
It was intense.
It underscored that a failure on their part isn't just a glitch, it's a potential catastrophe for their customers.
And lastly, I assume, just the sheer unpredictability of the threat itself.
Always. State-sponsored attacks, new zero-day exploits. It's an asymmetrical war, and you can never be 100% safe.
Okay, let's quickly touch on the technicals because the charts really do tell the story here.
Oh, they absolutely confirm the feeding frenzy. CrowdStrike went from about $250 to over $540 this year. The price action is just a clear, powerful uptrend.
Palo Alto Networks has been a bit steadier, but still a massive move up.
Right, steadier climb, it holds key support levels, consolidates, and then moves higher. It's a textbook picture of institutional accumulation.
And Cloudflare.
Net has had this sharp upward momentum. It's running into a bit of resistance around that old 2021 high in the $210 to $215 range. But the buying pressure has been very persistent, so technically the picture is bullish across the board.
So when you synthesize all of this, the big picture seems to be that 2025 is the year cybersecurity stopped being just another tech sector and became, I guess, a core utility.
I think that's the perfect way to put it. These companies aren't darlings anymore. They're foundational infrastructure. They're part of the nervous system of commerce, of government.
So this isn't a spike. It feels more like the beginning of a new era.
I think so. It makes you think about the future. I mean, as both the good guys and the bad guys rely more and more on AI, the complexity just spirals upwards.
And the spending has to follow?
The spending has to follow. The need for these adaptive, scalable security systems just ensures that spending will continue to climb, really, regardless of what the broader market does in the short term. It's become a permanent and growing tax on doing business in the digital world.
See y'all in the next Pro Ticker Deep Dive.